Hey guys, it's that Dividend guy coming at you with another dividend investing video. So today is a little bit more gloomy than I thought it was going to be, but that's okay. So Wells Fargo to cut its dividend as top rivals maintain their payouts. Wells Fargo plans to cut its dividend, breaking with all of the big Wall Street banks after the Federal Reserve last week set new restrictions on the payouts. There remains great uncertainty in the path of the economic recovery, and though it's difficult to accurately predict the ultimate impact on our credit portfolio, our economic assumptions have changed significantly since last quarter. But JP Morgan Chase, Bank of America, Citigroup, Goldman Sachs, and Morgan Stanley all left their third quarter payouts unchanged according to the statements from those banks. So let's take a look at why they're cutting the dividend. A reduction by Wells Fargo was widely expected after the Fed said it would restrict payouts using a formula based on earnings, which have plunged at the San Francisco based bank in recent quarters, partly on legal costs tied to the multiple scandals. The bank has spent almost 4 years struggling to emerge from its missteps, which began in 2016 when employees were caught opening millions of potentially fake accounts to meet sales targets. Wells Fargo said that it would announce on July 14th how far the current 51-cent dividend would drop. It's expected to decline 20 cents according to analysts. Shares of Wells Fargo fell almost 1%. Trading New York at 5:29 p.m., they're down 52% this year. The Fed capped dividends at the largest 33 banks at current levels. The central bank said it might conduct another exam using harsher economic scenarios later this year, limiting firms' ability to gauge prospects for dividends for the rest of the year. So from what I understand, the um, the problem was they were paying legal fees for the fraudulent accounts, and then the pandemic hit, and um, they weren't allowed to keep the dividend. So I think they're going to cut it down to 31 cents a share. Like it said, it estimated 20-cent cut, so 51 to 31. So what does that mean for investors? So the reason I bought Wells Fargo was because it was attractive price to dividend ratio um, versus the other banks due to the fact that there was scandal there. That's why I bought it. But um, I don't really think I want to hold it if it cut its dividend because I'm a dividend growth investor. So if I keep this in the portfolio, it it goes against the entire portfolio's, you know, like philosophy. So I think I'm gonna have to cut Wells Fargo. And I did some more research, and Dominion, actually my utility play, has only increased its dividend for 17 years. So it's not an aristocrat either. So if I cut out Wells Fargo and I cut out Dominion from the portfolio, then I will then strictly have status stocks, which is what I want, except Disney because they're my exception. But I no longer want to hold Wells Fargo if they're going to be cutting the dividend that dramatically. Um, they just had too many missteps. I tried to buy into the weakness, which is what you're supposed to do, and if they cut the dividend, I, I don't I don't want to own it anymore. So I got in at a really good cost basis. I'm pretty much going to be breaking even here at my current price, so I'm definitely going to be selling Wells Fargo. So let me know if you're a shareholder, if you plan on holding long term, if you're gonna sell due to the dividend cut. I'm at about $9 of passive income every month, and if I put that towards a different stock, I won't be out that money. So I'd rather just repurpose the cash and keep my dividend levels at about the same. So I will be selling Wells Fargo. Let me know what you plan to do with your shares down below. Remember to like the video, subscribe, hit the bell notification. I post a dividend video every weekday. And if there's news about some of my stocks like this, I post that. I post lists, top 10 lists of stocks you can always buy, growth stocks that I want to buy. I have a lot in the works, so I have a lot of content coming, but I don't, honestly, I don't really want to sell Wells Fargo. I'm actually a really big fan of the bank, and I know they've had missteps, but like I said, I wanted to buy into that. The problem for me is I have to be very strict about my investing philosophy, and SKT did this as well. When the pandemic hit, they completely suspended their dividend, so this is a little bit different. But I bought it for the 51-cent dividend and the increased earnings and and the recovery of the stock. But I don't really want to hold it if they're going to slash their dividend by nearly 50%. So, anyways, guys, thank you so much for watching. Like I said, hit the subscribe button, and I'll see you in the next dividend video. Take care, guys.